Hey, what's up? It's Paul. One of the best-known investment saying is sell in May and go away. Is it true? Should you sell your stocks in May 2020 and go away, or even sell futures? Let's have a look in 3 minutes. As always, this is not and should not be construed as investment advice. If you want to get more of this content, subscribe and give me a thumbs up. It really helps this channel to grow. First, is it a valid statement? On average, if we observe the S&P 500 performance, do we see a pattern? From the close prices of April to October's last trading days. In other words, the performance of the 6 months from May to October, the index has lower returns than the performance for the next 6 months period, November to April. I took the S&P 500 performance data starting from April 1980 to April 2020, in other words, 40 years, and I computed the returns for every 6 months. On average, the performance was 2.45% from May to October. However, for the period November to the following April, the return was on average a positive 6.95%, nearly 3 times more. And if we look only in the last 10 years, the performance from May to October is 2.62%, and from November to April, the return is 6.9%. Those figures are close to the long-term average. Another aspect of the S&P performance is that when it performs poorly, it performs way worse from April to October than the following 6 months. Let's have a closer look. When the returns are negative for the 6 months period, the S&P lost 8.64% on average from May to October. On the other hand, when it drops from November to April, the S&P 500 loses only 5.68% on average. The period from May to October is riskier than the one from November to April. Historically, the trend is unmistakable. Even if I will note that, in general, you should sell in May. After all, the average returns stay positive. You should at least reevaluate your investments. Now, what about May 2020? The market strongly rebounded in April after March's meltdown. It means we are at a relatively high level, not a pre-coronavirus level, but we are midway from the March's bottom. It may constitute a selling opportunity some investors can take advantage of. But the most important thing to consider is how do you think the economy will perform in the near and medium term? Will the 30 million jobs destroyed have an impact? Do you expect business closures and defaults? And if so, how can we have a V-shaped recovery? Can the demand be strong with the economic uncertainties? Those are the questions you need to ask yourself when evaluating your current and future investments. As I said in my video about the first quarter GDP figures, the second quarter will be dreadful. The earnings will be horrific and defaults are unavoidable. I think the economy will suffer until 2021. I, for one, believe that the stock market is too high and that a correction will probably happen somewhere between now and October. Question of the day. What is your opinion about the stock market level? Do you anticipate a correction? Let me know in the comments. If you have been getting value out of this video, subscribe and smash the like button. Thank you for watching and see you soon for my next video.